Hi, I'm Michelle Lafreniere, Director of Tax here at Profi 2020 Dental CPAs. Today we're going to discuss a cost segregation study. A cost segregation is a tax strategy that accelerates depreciation, resulting in tax savings in the year of the study. Instead of waiting the full 39 years for commercial properties or 27 and a half for residential rental properties, a cost segregation study allows you to break out parts of your property and depreciate them much faster. Let's take a closer look at how it works, why it's helpful, and what to watch out for. Let's first talk about depreciation and why does it matter. Depreciation is a way to recover the cost of a building over time. For example, commercial properties are depreciated over 39 years, while residential rental properties are depreciated over 27 and a half years. But here's the catch. Not all parts of a property wear out at the same time. Things like carpet, windows, and cabinets don't last as long as the building itself. That's where a cost segregation comes in. It allows you to separate those shorter-lived items from the rest of the property and depreciate them over 5, 7, or 15 years instead of waiting decades. Now let's talk about how does a cost segregation work. When you buy a property, you're paying for both the building and the land. The land can't be depreciated, so the first step is to figure out how much of the purchase price should be allocated to the land. For example, if you buy a building for $1 million and determine that 20% should be allocated to land, that means $200,000 is the value of the land and the remaining $800,000 is for the building. Next, a cost segregation study breaks the building into parts, not the land. Some components are eligible for bonus depreciation, resulting in accelerated depreciation. Things such as carpets, doors, and cabinets. Typically, we see about 30 to 40% of a building's value that can qualify for accelerated depreciation. Now, in our example, let's say 35% of the $800,000 building value qualifies. That's $280,000 eligible for faster depreciation. Under current tax laws, you can take bonus depreciation to deduct up to 60% of that eligible property in the first year. This means you could deduct $168,000 in year one, saving you around $62,000 in taxes if you're in the top tax bracket. Now, why is this beneficial? There's immediate tax savings. Instead of waiting decades to recover your investment, you get significant savings up front. You can also lower your insurance premiums. By reclassifying parts of the building as personal property, your insurance costs may go down. It also can help you improve your cash flow. The tax savings can be used to pay down debt or reinvest in your business. Now let's talk about what to watch out for. While cost segregation studies offer big benefits, it's important to plan ahead. There are going to be future tax liabilities. Accelerating appreciation means you'll have fewer expenses to deduct in later years, which can increase taxes down the road. You need to look at your accurate land allocation. Land isn't depreciable, so make sure the land portion of the purchase price is properly excluded. You need to work with professionals. A CPA or cost segregation expert can help ensure everything is done correctly and maximize your savings. Let's talk through the steps to take to have a study completed. When you buy a property, your first step is to let your CPA know so they can work with you to determine the land and building allocation. Your CPA will estimate how much of the building qualifies for accelerated depreciation, typically somewhere between 30 to 40%. Your CPA will work with you to complete the cost segregation request form. This form summarizes pertinent information with respect to your building. This will be used to complete the initial cost segregation analysis. Your CPA will provide this to the engineers. Your CPA will reach out to you after the initial analysis is completed. This determines if you're interested in engaging the engineering firm to complete the study. If you'd like to proceed with this study, you will sign your proposal and pay 1/2 of the proposal fee. The engineering firm will then survey your property and gather all the necessary information to complete the cost segregation study. Once the study is complete, an initial report will be submitted to you and your CPA for review. If you and your CPA do not have any questions, you will submit final payment and the final report will be issued. Your CPA will use the report to update your financial statements, depreciation schedules, and tax return. The final report will be attached to your tax return and submitted to the IRS. Due to the cost segregation study, you will have additional tax savings. Make sure you consult with your CPA regarding the best use of those savings. Now, let's walk through a quick example. Let's say you bought a property for $1 million and you determine the purchase price allocation to be the following. 20% is allocated to land, giving the land a value of $200,000. 80% is allocated to the building, giving the building a value of $800,000. Next, we determine 35% of the $800,000 is eligible for accelerated depreciation. This means $280,000 of the building would be eligible for bonus depreciation. Under current laws, bonus depreciation is 60%. If you take bonus depreciation on the eligible property, you may deduct $168,000 in year one. If you're in the top tax bracket, this could save you around $62,000 in federal taxes. There may be additional tax savings at the state level depending on state law. A cost segregation study is an excellent strategy for maximizing tax savings in the year a building is purchased. It's beneficial for property owners seeking immediate tax benefits rather than spreading deductions over several decades. To ensure accuracy and properly account for potential future tax implications, it's crucial to collaborate with a qualified CPA.